On the show today, joining us, Mayuresh Joshi of Angel Broking to answer all your stock queries, and Harshvardhan Rungta of Rungta Securities joining in to answer all the personal finance questions that we'll get on the show today. All right, on that note, let's straight away go across to Sumaira Abdi, who's standing by in Bengaluru. It is our Inside Bengaluru special, which is a series that we're running this week. And Sumaira is now getting us a few investors right from the ground there in the Garden City. Sumaira?
Thanks so much for that, guys, and a big hello from Bengaluru yet again. We're here on the streets of Bengaluru and we've caught up with two investors who have a lot of questions. So let me get cracking right away. We have Mrs. Pandey, who's actually a very, very keen investor. How many stocks do you hold in your portfolio?
I have so many stocks, but I have question about 3 stocks.
Okay, but before we get to your stock queries, tell me how long have you actually been invested and how long have you lived in Bangalore?
More than 10 years.
Okay.
I am invested in share market, and I'm staying here, Bangalore, about 3 years.
Okay, and we also have with us Keshav, who's another avid investor. Keshav, how long have you been invested and how long have you lived in Bangalore?
I born and brought up in Bangalore, and I have invested from 2008. So it's going pretty well as of now. So I have a few questions on that.
All right, so as you can see, both our investors have been caught by the investment bug quite early on. They've been invested for easily 10 years or more. So let's get started and actually answer some of their queries. Mrs. Pandey, what's the first stock you want to talk about?
I bought a share of Mastech at the rate of 400, and 50 has been sold at the rate of 450, and I have only 50 share about Mastech. So what we can do? Yeah.
All right, so the question then is whether to hold on to her investment in Mastech or exit. What's the advice?
All right, Mayuresh, you heard that particular query. Could you advise our investor from Bengaluru?
Afternoon, Nigel. I think clearly out of the business lines that Mastech operates out of, the demerger of his insurance arm, Jesco, clearly contributed a big chunk, 48% to be precise, of the top line. The other businesses that Mastech runs, the UK business and the BFSI business, I think they also contribute meaningfully. But clearly, I think the insurance arm demerger is going to create value unlocked, because the kind of IT spends that one really expects from the insurance vertical to come through, and specifically from its North American clients, that can have significant market share going forward and even a margin expansion. So again, clearly, I think though she's sitting on losses at the current point of time, if her time horizon is more than a couple of years, the advice would be to hold on to the stock. So at this point of time, I think our preference lies with the large cap IT names. So names like Infosys, which have delivered exceedingly well on their numbers, HCL Tech, TCS, I think they remain our preferred picks. But clearly, I think the horizon for the investor has to get elongated to more than a couple of years.
All right, that's the question on Mastech. Sumaira, what's next coming our way?
All right, so with that, let's get to our next query then, and let me hand it to Keshav. Keshav, what do you want to talk about?
I want to talk about on Tech Mahindra. I bought 500 shares of Tech Mahindra at 545 levels. After seeing so much of correction from 700 levels, in fact. But unfortunately, the next day when I bought, due to the profit warning, it came down drastically to 460 levels. But I see some bounce back is happening recently. But I wanted to know whether to hold it or to book the profit, or book the loss, or to focus on other things. Because right now I'm in loss, if you see. But my question is whether to hold on to it or whether to take a loss and to focus on others.
All right, so fair enough. And clearly we're in the IT capital of India because most of our queries are on IT stocks. But what's the advice on Tech Mahindra?
Well, let's ask Mayuresh. Mayuresh, questions coming in from the IT capital. Well, Infosys came out in flying colors yesterday, but what does that mean for other companies like Tech Mahindra, which have sounded far more cautious for the quarter?
Afternoon, Surbi. Yes, I think the profit warning that Tech Mahindra has sounded off, I think clearly was an indication of a weaker quarter to come by. So I think Q1, Q2 expected to remain soft because the profit warning primarily comes on account of weaker earnings expected of their organic communication businesses, which contributes roughly 52% of their top line. Now, if you look at the enterprise part of the business, the enterprise part has been doing fairly reasonably okay for Tech Mahindra, and that is expected to grow organically quite reasonably well over the next few quarters. So there are a few headwinds, tailwinds that the company is obviously facing. Headwinds in the form of higher visa costs and clearly the kind of profit warning expected from the telecom business. Tailwinds in terms of a stable currency coming through and expectations of improvement in utilization rates. So clearly I think based on the profit warning, we also have cut down our numbers both in terms of top line and the profitability for the company by 5 and 6% respectively. However, our take is that from third quarter FY16 onwards, better numbers will start getting reflected. Cost optimization efforts, as the management indicated, are already on, and the operating leverage benefits should start kicking in. So my take is that keep an horizon of more than a year. Valuations at this point of time also extremely attractive at around 13.7 times FY17. And clearly I think keep patience onto that stock. The next couple of quarters are going to be soft and weak, but clearly with a year or a 15-month time horizon, we're still maintaining a target price of 646.
All right, Mayuresh, that point's well taken. Then valuation's not looking too bad at around the 13-14 times. And importantly, if you just take a look at what the stock has done from earlier this month, the stock, in fact, is higher by close to around 12%. So watch out for that stock. You pull up a shorter time horizon, you'll see that stock, in fact, from July 6th, if I'm not mistaken, the stock, in fact, has rebounded from around that 450 level. But Sumera, let's get back to you. What's the next query?
All right, let's shift focus finally to the banking space then, because Keshav has a query on Canara Bank. How many shares do you have?
I have 200 shares of Canara Bank. I bought it at 315 rupees. But I see some of the messages on the board saying we should hold on, we should not buying on the public sector banks. But still, I've already invested at 315 levels. It is not crossing at 300 levels at any cost. So my question is again to hold on to it, or if I want to hold on to it, for how much time it will take to come back to my, like at least to give a decent returns on that.
All right, so should I remain invested in Canara Bank? If so, for how long? And what are the levels that can be seen on this stock?
All right, Mayuresh, that's another query coming in. Now on a banking stock, what's your take?
So clearly, Nigel, I think our preference stays with the private space. But if you talk about Canara Bank specifically, it has seen deterioration in its asset quality. The gross net asset ratio deteriorated to 2.7% in the quarter gone by from 2.5%. What really hampers a lot of these mid-cap PSU banks' progress is the lower capital adequacy that these guys maintain. So Canara Bank with a CET1 of 7.2%, a lower CASA ratio, it does not help in balance sheet expansion. So I think the NIMs stay within that range of 2.2%, and clearly I think for return ratios to improve, more money needs to get pumped in so that the balance sheet expansion happens. So the government has promised some money to get infused into a few of these banks, but clearly I think a lot more needs to be done, and again the asset quality needs to get stabilized, which I don't think so will happen at least for the next couple of quarters. At least for the next couple of quarters, the asset numbers specifically both on the gross and the net side are going to remain soft, and though valuations remain extremely compelling for private public sector banks, I think it's going to take some time. So again, I think the advice to Keshav would be he needs to have a time horizon of at least 15 months. A couple of quarters, again, similar to what we discussed for Tech Mahindra, I think are going to be weak for a lot of these PSU banking lot. And clearly, I think for valuations to improve, I think will take some time. So though valuations are depressed, I think he needs to have patience. So hold on to the stock, but keep a time horizon of more than 15 months. He'll be able to recover his cost price.
Okay, so patience will pay off in Canara Bank. That's Mayuresh's take. Sumera, what's the next question?
All right, thanks for that advice. And finally, the last word once again to Mrs. Pandey. What stock do you want to talk about?
100 Voltas, bought at a rate of 224. It can be held for 6 months. If it is advisable, then I can hold for 20 to 25% profit. Otherwise, should I exit from it and invest in other stock?
All right, so the advice that's being sought is on Voltas. Should she remain invested? Should she exit? And if she exits, what are the opportunities that she can look at?
Okay, well, that's a nice profit that the lady is making on Voltas. Mayuresh, stock's just about, what, 15% off from its 52-week high. Should she remain invested?
So clearly, I think, will be the two business lines that Voltas operates out of, the EMP business and the unitary cooling solutions. EMP has been a big drag on Voltas revenues. Excuse me. But clearly, I think going forward, with an improvement in the order book, I think the EMP business...
All right,
Okay,
Mayuresh, we'll come back to you. Just take a bit of a break and maybe sip some water. But getting back to our markets, we're doing quite well. The Nifty is still holding